Okay, we're here. Good morning. So I'll exaggerate a little bit for theatrics. Markets crashing on China news. Has it happened before? Sure. And this one is a little bit more than what, some of the little 1 or 2 day pullbacks. As we discussed yesterday, this prior low, this pivot low right here became major support since prices pushed up ahead of it. And we discussed that the weekly time frame was up multiple bars in a row with momentum slowing, and that a pullback was possibly in the cards, right? So, and here it is. So the daily time frame at the moment, this bar is not closed, right? We'll see what it looks like by the end of the day. If it looks like this at the end of the day, it'll suggest prices are going lower, right? So a close under major support within this uptrend. We already know that we've got a deep retracement on an intraday basis. We'll see where it ends up at the end of the day. And as you can see, it's still kind of plodding or probing its way, trying to get lower at that major support level. We'll see what happens at the open. A lot of times when the futures have been rallying or declining, rally to the downside like this, so many times what happens is you get the gap down on the spiders and SPX, and you get shakeouts, and it'll start to rally. We'll see. So what we look for is breakdown failures or immediate reversals, with probably within the first, I would say, 10, 15 minutes. But just something to keep in mind and not get overly bearish thinking that the market is going to crash here. We could already see that today's range, while it's still early, is getting close to yesterday's range. So sometimes it's a guide. You can see how these bars here are relatively close in range. Some are a little bigger, and then momentum stalled here and so on. So that can be a guide as to how far might things run. So when we think about extended, or if you want to use the word oversold, I think this is an objective way of saying, hey, you know what? This is a big bar yesterday, and whatever that range is, and we could see it's 47 3/4 points yesterday. So there's about 10 points left, right? This is the bar right now, 36.5. There's 10 points left before it would reach the same range. And so if we were to project that down and just kind of eyeball another 10 points, let's say 70 down here, would take us right down to the next support level, which is where, thinking about the range of the day, a projection, another 10 points down would put it on the next level of support. That makes perfect sense to me as a target to think about a lower time frame, right? And I would go down to the 5 or the 2 minute with prices down there, looking for a retest and reversal pattern of some type, breakdown failure, downside shakeout, anything that would suggest to me at that point in time that sellers got overzealous and got caught, and then the markets will rally. That doesn't mean it's going to change what's happened here, right? I'm talking about taking an intraday position, looking for a retracement that sometimes could be large. We just don't know. But our factory work, as I like to call it, is this. Is look at things in an objective way and say, oh, what was that big range? Where would that put this range that isn't the size of that yet? Would it put it in an area of price support where buyers would be, not in the middle of nowhere, a void? So in this case, yes, it's in an area of relatively significant support where if we were to get, say, an NYSE tick extreme at that point of above 1,000, and this could be, I would assume, I'm pretty sure that when the market opens, that tick extreme is going to be below minus 1,000 at the open because of where prices are right now. Now, Generally, when you get a tick extreme at the open, it's a pretty decent indication of the day being generally negative, right? Versus a gap down. And this is a larger gap down, but it's just a piece of information to use that maybe without a gap down of significance, getting a tick extreme of minus 1,000, you're typically going to get more selling throughout the day. And the same thing on the upside, you get a tick extreme of plus 1,000, while the markets probably would retrace from that extreme. Historically, it suggests that there's more coming. Now, a little bit more, I'll try to make this quick. If you were to get a tick extreme, say from a reversal day like this after multiple days up, that's a very good indication of continuation versus prices gapping down into support after it's already been going down a couple of days. Probably going to get a decent retracement. Anyway, so let's see where other things are at here. And Qs just sitting right on that major support level there. And it's only Tuesday, but we've got a weekly reversal bar here. So we'll see what that looks like on Friday. Whether this is what I've coined as Mr. Schizophrenic market. So we've seen plenty of times markets go down with a vengeance and rip right back to the upside again. Now China and Trump are playing chicken, so to speak, and who's going to blink first? I guess it's all part of the game, but we've seen this scenario before. So on major support, poking through it a little bit, and as I said yesterday, on a closing basis, a violation of major support violates the uptrend. No diagonal lines needed to do that. It's just simply look to the left. If there's a pivot low and a higher high, it retraces down through it. It's no longer an uptrend. However, it is on the weekly time frame. So you go and now you could find, look for a significant support point, which it should not get all the way down there, but it might. A pullback into that area is where we would look for a buy setup. And then you go down to the daily time frame and you look for the same thing I explained with the intraday idea. And we're just using different time frames. So the intraday, I said, with the projection of the ES lower, we then go to the intraday time frame looking for a bullish pattern and confirmation of that level. So a bullish reversal on the weekly time frame or the beginnings of it will start in the daily time frame at a support level. So we'll see. Next support level, if this doesn't hold here, you could do the same thing. Look at the range. Look at the range. See if it's 8160-ish, give or take. If it continues to go lower, we look to be a buyer down there with the appropriate pattern on the intraday time frame. Dow is smashing through that level, right? So the Dow obviously is the one showing relative weakness. We go look through the Dow stocks and see, what's going down and so on, and what's weaker. Is it at support, so on and so forth. Again, I call it factory work because it's repeat, repeat, repeat. You do the same thing, and that's how you get consistency in your trading and, of course, results. Rather than mirage trading, I was like, oh, I think this, I think that. What is it based on? Is it based on a trading plan, or is it just wishful thinking? And so I think Alex is helping out here. Caterpillar and Boeing getting shellacked. Boeing got shellacked yesterday. And Caterpillar looks like it's just starting. 140. That's a pretty good shellacking, but right on that pivot low there at support. So maybe it stabilizes. We'll see. All right, Russell. Deep retracement. It's not down to major support. But remember, this is the one that broke out on the weekly time frame. And I wrote in the letter, while this is bullish and the monthly is bullish and so on, it should not violate or close down below the breakout bars low. That's a shock pattern. And so we'll see where this ends up at the end of the week. You cannot be thinking that this red bar right now is going to look like this on Friday. Of course, it could be bigger, but it might be a bottoming tail bar. And if it's a bottoming tail bar at the end of the week, what do? You buy the hell out of it if it breaks out above this level, because as we've looked at before, right, there's this nice big void up above. So we'll see how it all plays out. Since I got that open, let's look at the transports. They don't move pre-market. We don't get an indication anyway, but they'll probably gap lower as well. We'll see if it holds this swing low right there. Oil kind of stabilizing on that support level, major support level there after a really deep retracement. Bonds are up. Makes sense, right? So they're kind of in a trading range here, and it's a pretty big reversal, and they're coming up into some resistance here, give or take, right? Let's poke it up a little bit, somewhere in this area. So this can help with determining, are there intermarket relationships that can help guide us to a better probability of finding a turning point in the markets. So this could be bonds continue to push up into this resistance area, and the ES is down at that projected point there where we extended, and this is dropping a little bit more as we're talking. So we look for that alignment to help, and maybe even if the tick opens it at minus 1,000, and maybe it's going to open up at minus 1,300, who knows? And it then retraces higher, typically does, and then goes back down. So we look for this alignment of multiple concepts or markets to help determine a turning point, and then ultimately we look at the pattern to say, oh, here's the bullish pattern that is now confirming everything else that I'm looking at. And that increases my confidence level of all of these things coming together. Gold, of course, it's turning around here. And again, we've talked about this bullish downward sloping retracement, the monthly time frame we've looked at, so on and so forth. And I talked about the potential of a reversal here down on this low. We're getting that. Yesterday, we even talked about the probability that if the markets did pull back, gold was going to rally because they've been having this inverse relationship. So next resistance here is not that far away. Let's just duplicate that. So give or take, it's where these overlapping bars are, right in this area, 1490-ish, give or take, somewhere in there. And that could be another piece of information that helps guide as to a turning point. Now, I'm not suggesting you have to look at all these things, especially if you have limited data or space on screens, but just set alerts. Sometimes, this alert will go off, your bonds alert will go off, and you could use TLT or GLD, the ETFs, if you don't have the futures. Silver, kind of perking up here. Gold looks actually a little better, a little cleaner setup there. And I don't know what else. Semiconductors, which just another thing they wrote about in the letter that was a fly in the ointment with the market over the weekend, was that, while technology went up, semiconductors, they broke to the downside on a sell recommendation from a brokerage firm on some of these semiconductor stocks. And while the markets went up last week, this was making a lower high, and that just wasn't a good sign either. But retracements happen. The weekly is still in an uptrend. So let's not get overzealous here on the bearish side. This is, again, the Mr. Schizophrenic market. And over the, couple of years or so, we have seen plenty of times where these retracements, which seem like mini crashes, just get turned around relatively soon. So stay objective, multiple time frame analysis. If it's coming lower, Nothing we could do about it. Trade it, short it, play the bounces. If you're swing trading and you're only trading from the long side, wait for it to dust to settle and things to set up, and then we'll find new opportunities. So, all right, all yours, Dan.
All right, thanks. Good morning. Yeah, steady downtrends here pre-market. But the good thing is this is going to get the volatility to rise. So once we have a multi-day sell-off with high VIX, that's my favorite setup. Selling put spreads with high VIX. Yeah, and we'll absolutely, we'll sell the short the VIX also, VXX. All right, but we sure nailed this. We, all afternoon into the close, and I, woulda, coulda, shoulda. I think I was telling David or somebody, yeah, buy puts on the diamonds with a $1 stop. So that was a nice home run if anyone did it. We stopped out of a number of things yesterday with our tighter trail stops. We're gonna have a few gaps to deal with today. The biggest negative gap I see is Cliff. We're short the 750 naked puts. It was a beautiful breakout daily, weekly, and now they're buying some company and getting whacked. So I just sent out, well, let me give it to you all. I sent out a telegram saying, let's not take a stop for now. All right, any other open positions you all want to talk about? Before I look at gappers, Burl. Burl is, hey Tanya, do me a favor, your drop down, all panelists and attendees. Burl, we did not enter, but I'm watching that. Actually, let me go through opens here real quick. I remember my pre-market prep, MT live. I'm more concerned with my merchandise than looking for new opportunity. So Tanya wants to look at APA. Yeah, we have a Condor, and our stop is a 30-minute low, which is yesterday's low. And when I looked at it yesterday, we were only down like 50 cents. So even though, it's $1 in the money against us on our short put spread, because of the high volatility when we entered, we aren't getting hurt that bad. So just keep the same stop, Tanya. In the weekly, we have Netflix call spread, beautiful gap down. I'll be tightening stop on that. GPC, I wish this one I held off and didn't trigger it. We have a put spread, the 103 100s for Friday. Amazon, I actually said, trail over 15-minute bars high yesterday. So we're out of it. But now 1760 way down here. Hey, Greg, you were woulda, coulda, shoulda wanting to sell a put spread on that yesterday. So you now have a second chance when it sets up. Now maybe.
I was talking after the fact. I didn't even think about it. My thoughts were when we talk about intraday, like with the SPX selling 0 days to expiration, and you mentioned these FANG stocks having high premiums. I was like, yeah, why didn't we look at that before and just do the same thing? I mean, they're not 0 days to expiration, but it's the same concept.
Right. And then but the answer is I do every day. That's I do. And then we just have to make a determination of, is the days to expiration for the pattern acceptable? But absolutely, that's part of my daily routine for the weekly options trader. But yeah, like hypothetically, if this were 0 DTE yesterday, a Friday, then yeah, that would have been an absolute no-brainer, right? On this 1, 2, 3 here, climactic buy setup, engulfing bar, 1, 2, 3. Even if it didn't work, that would have been a no-brainer setup for our 0 DTE. So all I'm saying is, look, now gapping under the low, you got another chance to keep an eye on it. But I don't like the steady, nasty 15-minute pre-market charts here. So I'm going to be very selective on new longs until we get that reversal. McDonald's, we have in the weekly, we have a put spread for Friday. And it's still holding, gapping down a little bit, but that ain't bad. You know, these credit spreads, they just have to hold support. We sold it under last week's low. That's all we care about. That's the beauty of these. A swing and options trader. So yeah, Robert, in terms of a new trade, I don't know what to do with Amazon, and I'm not quite sure what you're thinking either, which is why we frequently remind people, please, you know, tell us what you're thinking instead of just throwing out a symbol, because we could be talking totally different, you know, thoughts. ADNT, we have a put spread. Alley, put spread. Bearish gap down here. So we'll keep an eye on that. But our we're short the 31s. We have a 31.28 put spread. Beyond, we had a put spread, and I put the stop in under the lows, but I also set up the credit that we received goes to 2x, then just stop out. Now CCK, I can't tell where it's gapping, but we're long stock there. Cliff, we talked about. DFS, I wish I didn't trigger this one with the weak market. This is a bank stocks were acting very well, and this one just triggered the breakout weak close. So we'll just manage it like always. DLB, we have a put spread. No, we are long stock on this 1, 2, 3, but we gave it a big stop. Dove, we're long stock. ENTG, we're short stock. FLT, put spread, and I tightened the stop yesterday. Fitch, oh, Fitch stopped up break even yesterday. I closed it out. No, not break even, at a small gain. We stopped at 986 yesterday. All right, that's done. GE, we're core long this, and that's kind of a breakout failure right there, but I gave 2 half stops, so just let that play out. GPC, long stock. Harvest, this little pot stock's just been a dead animal. IGT, long stock. ITT, long stock. Jable, core trade, covered call. You know what, we only have 3 minutes left. I'll go through the rest of those later. Look at Lima Echo here. Beautiful, beautiful pro gap here. Here's a breakdown failure in October. Trading range, flat 20 and 50, gapping up. I put it in an upper right 5-minute window here. And because of the weekly price void, target 14 to 16. So that's my favorite bullish gap today. Roku, I have 0 interest in swinging this long, but with the gap up here in a weak market, this could set up as a day trade long. Let's keep an eye on that. Penny stock toy, gap in the $9 and change, no interest. Cena, sell setup. Now bold, that kind of looks like a buyout. $58, you're gone. AXSM, 45, big gap. But this could be a gap and crap candidate. Things that gap this big after, you know, straight up far from the 20. Let's put him here. Our NVIDIA. We just, you know, we stopped out the back half yesterday. This was a core trade. We just sent out a little instructional email showing how we use covered calls to generate a beautiful 28% return in 7 weeks. 62, 65, gapping down a little bit. This also would have been a beautiful gap and crap candidate, hypothetically, if it was like gapping up $5 yesterday. You're short a 15-minute low. Nothing to do with it now. Twitter, they're doing something with a new stock, private placement or whatever. CCMP, 129, bearish gap here. We'll keep an eye on it. This had earnings, Bank of Montreal, $74. CBL, penny stock, bearish gap, no interest. Sam got an upgrade, $5, 378. Wow, 378 didn't put a dent in yesterday's bearish bar. All right, Lima Echo, this is my favorite one. Let's DCI, no pattern. Cliff, I got on the other screen. UNH, they said their profits are going to be lower. No pat, maybe a call spread. V-Ray, some news in the bio world. Coup had earnings, bearish gap, but excessive, nothing to do. XOP, I said, was a short under yesterday's low. That looks great. You could short it right here if you want. Stop yesterday's high. Or go to the 15-minute chart if you want a tighter one, maybe over 2050. But that looks absolutely